Hey folks, Dan Frio here with your market update for July 19th, 2024. So it's official. I am now an official troll. If you want to know what I'm talking about, wait about 5 minutes. I'm first going to go over the economic news for today, and then I am officially a troll, and I'll explain what's going on. So right over here, here's what we see mortgage rates. They dipped a little bit yesterday. Well, that's going to be kind of not the norm for today. Why is that? Well, there's no economic news out today, but we have the markets coming down a little bit right now. We have the MBS market down 12. That means mortgage rates are going to go up about 5 ticks. So right over here, we should be about 6.85 by the end of the day based on right now where we are in the bond market. But I want to show you an interesting interview on CNBC. This is a former guy that sits on the Fed. Now he never comes out and says, the Fed's probably going to cut rates. So listen to this interview, and then we're going to get over to what the economic news and how this is affecting the markets right now. And then I'm going to explain to you guys why I am now an official troll. So get to it. Let's get to the interview, and then we'll be right back.
Let's talk a little bit more about the broader market and how the Fed is viewing all of this latest data as officials publicly edge closer to the idea of rate cuts. Joining us right now is former Fed Vice Chairman Roger Ferguson. He's the former president and CEO of TIAA. He's also vice chairman of the Business Council and a CNBC contributor. And Roger, we've all kind of assumed at this point, at least the markets have, that there is going to be a rate cut in September unless we see some startlingly different data between now and then.
No, thank you, Becky. I think that's probably the right assumption this time. For the last year or so, as you and I have discussed, the markets have
Watch Becky's reaction to this. It's kind of funny.
Sometimes been ahead of the Fed. I think right now there's a much better alignment. As I listen to the Fed speak, including, importantly, Chair Powell, they're clearly talking about the dual mandate. They're clearly signaling an increasing confidence. So I, too, believe that a September cut right now seems like the more likely outcome.
Holy cow, stop the presses. Roger, that is the first time I've heard you say that, and you've been
never
right
smiles.
every
Watch.
step along the
He
way in this
smiled.
journey. As the former vice chair, you obviously know what you're talking about on these things, so you think that's the case at this point, too. I guess I would point to politics around the edges, and I know we've had this conversation again and again about how the Fed doesn't really consider politics. But I think at this point it's reached kind of a crescendo rate, and it's hard not to hear some of what's being said and at least internalize that, even if you're trying desperately not to allow politics to affect you. Donald Trump had an interview with Bloomberg this week with a number of the reporters there and said a lot of different things about Jay Powell and the Fed. He said, first of all, that he's inclined to keep Chairman Powell in that position. But I think the coda that came with this was assuming that, he kind of does what he thinks is right. And one thing he would not like to see is any cut in interest rates ahead of the election, thinks that would be helping out his competitor in that case. Does that have any sort of weight that takes on? And if there's a number, a data point that comes out between now and then, is that something that they say, okay, we really have to hold on because you have a lot more riding on it this time around?
So I think there are a couple of things. First, recognize on the issue of politics, the history of the Fed does not look kindly on former Fed chairs who have given in to political pressure in the past. And so I think the institutional culture is to try to drown out or ignore all of the noise. Secondly, recognize that in this case, there's going to be howling on either side. If they cut, if they don't cut, someone in the political fray is going to be unhappy. And so that's just, goes with the territory when you're moving or even not moving this close to an election. I think you raise a good point. If there's one data reading that maybe leans in the other direction, I think they'd be unwise to overweight that, given what they've said. It feels to me that, all of the Fed speak and the numbers coming in thus far are consistent with, a first move in September. And I think they'd be, wise to make sure that the data talks as opposed to listening to politicians on either side, because they're going to get contradictory pressures, and they should recognize that's just part of the game right now.
So let me ask you this. If you think the first cut is coming in September, does that mean you think that this is the beginning of a number of cuts to come, or is this cut, pause, look around, see what happens next?
Very good question, Becky. And we've just seen in the ECB case, for example, cut and pause. Some other banks have cut, and I think they're waiting to see what happens. I wouldn't necessarily say this is the start of a reduction campaign. The Fed will continue to be data dependent going forward, but they want to recognize that they don't want to let their rate drift into more restrictive territory than necessary, and they certainly don't want to risk slowing the economy unnecessarily by holding on for too long. So I'd say one cut and still being data dependent, and let's wait and see what happens.
I didn't think otherwise. He's not going to come out and say this is going to be a series of cuts and things like that. The market would go crazy, just completely crazy. So right now, based on the data we have today on the economic calendar, which is absolutely nothing, look at it. We got the MBS is down 10, and I told you what was the effect on that's going to be. So now here's kind of where I'm kind of going off topic a little bit, but you have to pay attention to who in the heck you're watching. So now officially I'm a troll because I reach out to these guys a lot and just call them out. And you ever have those people, it's like a debate when you're talking to somebody and you just want to debate saying, why do you think that? And why are you thinking that? But all they do is just yell at you and scream and pound the table and just have no context for you. So that's why I continue to go through this, because then you also watch the track record to a lot of these crash people, and the track record's terrible. They've been telling us, the housing market's going to crash, 40, 80%. They've been telling us for 3-4 years. They say the stock market's going to crash last year. They remember Silicon Valley Bank? Remember that? And back in 2023, that was going to take down all the banks. And what has happened? And we even had mortgage rates go from 3 to 8%. Well, the inventory, or the number of units that housings are selling at, have dropped dramatically, basically to a 40-year low. But that even didn't cause a housing crash. But these guys keep going. Well, so here's today's agenda. If one says it, the Grand Poobah or Venture Capital, if he says it, then you have all the minions behind him saying the same thing. So this is my because they called me out. Let's go through it. So bankruptcy, D.R. Horton's going to file bankruptcy. D.R. Horton's going to crash. This is a year ago, and this was a month ago, and so forth. And it was even just yesterday they came out, or the other day they came out and said it's going to crash. Well, D.R. Horton just came in recently, and here's what. Stock's making the biggest move, and when was this? This was just yesterday. Is D.R. Horton. What was that move? Did they crash? They go bankrupt? They go out of business? Well, no, they actually blew out earnings. They had they look at it. Q3 earnings were beat. We have they authorized a $4.4 billion buyback. They're not going to buy back their stock if they're going bankrupt. Yes, they are saying sales are a little bit tight, but they're okay. Okay, so these people are telling you, oh, they're going bankrupt. The world's going to end, this and that. Now let's go over to the other context we have from just recently, and this isn't not too long ago as well. Florida, Texas collapsing. Yes, they're collapsing. Oh, we get it. Okay, but you have the Grand Poobah up here saying Zillow estimates it's killing. Now, next thing you know, right here, the minions follow behind. Zillow exploding, price cut surge, and whatever. Well, let's go into the Zillow report they're referencing. So we go right through here, and you can check this out. This is exactly what they're referencing. Well, instead of just taking talking points and finding what you want, let's just look at the data here. So you scroll down through, and yes, the markets are cooling, especially in Florida and Arizona. But if you go down through here, the high costs weighted on. But what's truly going on in the markets? Well, with the rise in inventory, home value growth has pulled back. Annual appreciation, appreciation? Let me get my glasses on. Is that appreciation? Appreciation is 3.2 nationally, down from the 2024 peak of 4.6%. So this doesn't say we crashed 40% or 50%, or some videos have 80%. Actually, home prices are still on the uptick, which completely baffles me too, because we had mortgage rates at 3, then they went to 8, and people are still buying. It's a conundrum, but I get it, because if you continue to rent, those rent payments keep going up and up and up, and everybody's complaining about, insurance and taxes and everything else. Well, if you're a landlord, you're going to push those onto your renters, so your rent's going to go up all the time. Okay, but let's get back to this. All right, so then we go down through here, June, the report. Let's take a deep dive into these. And I'm not sugarcoating the data. I'm just going from the top down. The typical home value in the U.S. was $362,000, up 0.6% from last month, up 3.2% from last year. The monthly growth is slow, absolutely. It's the slowest since 2011. The typical monthly mortgage payment assumes 20% down was $1,918. Okay, so now let's keep going going on this. Home values climb month over month in 45 of the 50 states. So yes, you could pick that 1 or 2 or 5 states that didn't have home appreciation and say, here, look, the world's ending. But if you look at the other 45 states, it's kind of okay. Where is it? Buffalo's up 1.6%. Cleveland up 1.6%. Pittsburgh, Providence, Hartford, Connecticut. Home values fell on a monthly basis in 3 areas. Austin, there's the stepchild. Phoenix, there we go again. Tampa. Okay, so it's Austin and Florida, especially Tampa. So they're going to focus in on those 2 areas to say, look, guys, everything is crashing. Okay, so let's go down, keep going through. Home values are up in 46 of the 50 metropolitan areas. So again, this goes through. Okay, so they're down home values are down from a year ago in New Orleans, Austin, San Antonio, and Birmingham. So again, there's that Austin. So if you use Austin as your poster child, your narrative can be crash, crash, crash. But if you're not concerned with Austin, you're basically concerned with the whole other part of the country. Don't worry, folks. The world isn't going to end here. Okay, so let's keep going down. Now, here's what they keep saying about inventory. So what's the real facts behind inventory? Here it is, and this is the report they're using. New listings decreased by 9.2% month over month in June. You look at that and you're saying, that's not good, okay? New listings decreased by 0.4% this month compared to last year. New listings are 25% lower than they were pre-pandemic levels. Okay, so the listings are down, up. What is it? Inventory levels were 32.6% lower than pre-pandemic level. The smallest gap from this pre-pandemic averages is in 2020. Then you keep going through it, and you can keep going through this. I'll put the link down below. You dissect it, and then you give me your analogy of what's down below. Is inventory all over the country just blowing up, and it's going to, basically crash the market? Or, can you pick just a few areas and say, okay, look, guys, the whole world's ending? So that's what I want you to understand. Let's say price cuts. Okay, I'm not saying the overall market is peachy, but what I'm saying is these guys do a complete disjustice to you because they're never right, okay? The D.R. Horton thing, you can go back a year. They're telling us they're going to go bankrupt. They're out of business. They're not, okay? And then you go over here. Now the agenda is, and Nick, he's the grand poobah, all this stuff. As soon as he says something, all the minions fall in place. But you can see, again, 18 hours ago, Florida and Texas collapsed. Zillow estimates down 21%. I'm not going to say this is false, but if you look in general, you can see where, again, another explodes, price cuts surging. Well, yeah, in particular areas. Let's go to the price cuts. Price cuts and shares sold. 24.5% of listings in June had price cuts, up from 23.8%, okay? If you ever look at Altos Research, check out one of their videos, one of their live events. He usually tells you this is kind of, 20-25% is kind of normal, okay? That's the highest share in June since 2018, okay? But again, you have to put the relativity into this. 22.5% of the listings had a price cut last June, okay? Had prices cut last June. 35 of the homes sold above their listing price in May. Okay, so they're having price cuts, but they're getting more money because so here's what people are doing. They come in initially and they're like, my house is worth $1 gazillion. So they put the price way up. Nobody buys it. So they cut all the way down to what it should be valued at. And then they have a horde of people coming in bidding on that house, and they're bidding 35% of the homes sold above the listing price. That's basically what's going on. Okay, 40.5% of homes sold above their list price in May. Okay, so that's the data. So I'll quit beating a dead horse, but my reluctancy here is my issues here is all they do is preach fear. So guys, if you're out there looking to buy your first house, don't use the data they're providing you because there's so many inconsistencies there. Do your own research. Okay, check, is it a better area to rent or buy? You can check that out in prices. How's your market values doing? Well, just go to Altos Research. This is a great tool. Let's go to Altos Research. I'll tell you how to get exactly there. Altos Research, you can see right through there. You click it. You're going to go back to the top at Altos Research, pick products, market report, and we'll go down through here, and you can see the last report I pulled was from where? That's all you do. You put in the area that you're looking for, and it'll tell you exactly what's going on with prices, price cuts, what's going on with values. Here's the values and everything else. So do your own research. That's the number one thing I can tell you. Do your research in your area. Is your area good for renting or buying? If you don't have the answers to these questions, reach out to us. We can help dissect to see, here's what you can be approved for. We'll match up with a realtor. Then you can start looking around and see, is it make sense to buy or rent? I don't know your area, but my main thing is to call out these guys that keep just posting all these videos just to say the world's ending, because all I need you to do is grade these. Go back and watch their videos for the last 2-3 years. And where have their predictions put us? And are we there now? So watch mine. Give me a thumbs up if you think my predictions are, have been. Let's go back to have been. Have we been accurate for the last 3 years? Have I been accurate? And then compared to, have they been accurate? Let me know down below. I'd love to know your context. You can go back to their videos, my videos, watch all this stuff. And I ask these guys every week, would you guys like to join me in a podcast? Would you like to join a live event to see, let's see, why do you stand where you stand? Nobody responds, and when they do respond, I'm going to report you to the CFPB because you're a troll. So that's what you get. So unfortunately, I'd rather just work with adults in the room and work with realtors and people that really know the markets. So I'm coming up with several videos in the next month with actually the economic ninja. And if you want to talk about crash people, he is one of the top people in that sphere. And so he's been kind enough. He's flying in once again to meet with me. We're going to do some shows together to educate you guys. There is cycles in real estate, but one of the biggest things we want you to understand is the numbers behind it. Does it make sense to rent or buy? So you guys can make your own decision. So that's my report for today. I will be coming back with the closing bell. If there is any data that can be popped up, we'll focus in on that. But if you go right over here, here's my website. So who am I? What do I do? Am I just a YouTuber out there pumping, videos out every day? No, I'm actually a loan officer. I close loans every day. I talk to people every day. I already got one contract in today, and it's Friday, and it's not even 10 o'clock my time. So I write loans every day. I'm licensed in all 50 states as well as Puerto Rico. I'd love to help you navigate this market. You might be not in a position to buy. Your area might not be a good area to buy, but we would love to help you kind of at least navigate your options. So number one, go to my website, therateupdate.com. I'm going to ask you one thing. If you're looking to buy your first home, check out the grant finder. It's right through there. It's going to find 3 grants for you if you qualify or not. It's going to say, here's some programs available to you to see if you can qualify for these grants. If not, you can just move over to the next section, the Apply Now tab. Click that. You're going to be launched out to a system where you're going to set up a scheduled call with us. We do that all the time. It's not a sales technique. It's basically going there to answer all the questions that you have before or right after you do your application. Okay. But if you don't want to wait for all that and you're like, Dan, can I just call somebody and review my situation? Well, yeah, just scroll to the bottom of our website right through here and you'll find that information right there. It's 844-775-5626, or you can reach me directly by email. And if you're one of those ones calling me a troll, you're more than welcome to email me at dan@therateupdate.com. Thanks so much for watching, guys. God bless. Have a fantastic day. I'll see you at the closing bell. Later.